Good morning, everyone. How's everybody doing this morning? Happy Friday. Wow, I tell you, after a long weekend, the next full week back just feels really long. Holy moly. This week felt like it was like double the length. Oh man. Yeah, it's funny. We've got some folks in Scandinavian countries and they have like these long holidays. I'm like, I could deal with that. I could take a whole month off. Stuff I would have never said 30 years ago. Oh boy. Okay. I guess we better get to work, huh? Okay. Overnight inventory is short. Bulk of the trading, probably 75% of the trading is underneath yesterday's close. Now there's yesterday's close. There's the value area or the cost basis. So that's 70%. The blue stuff is 70%. So it's probably about 80% short because about 80% of the trading is underneath the close of the previous day. Yesterday, I gave you guys a trade for the larger traders. I said that this was a look above and fail of 75.88. But I said, wait, if you don't want to carry these contracts over, I said, wait till Globex opens, and that candle there was your tell. And you should be shorting here, stop at the top of that candle, and then the 70 area is where you'd be covering. So that's not a bad, that's like, that's 10, 15 points. You had to wait for it. It took a while to get down there, but if you shorted 85, 82, and you're covering 71, 72, 74, this half an hour chart is really, with these levels, it's really working well for us. Um, the balance level is 74.33 to 55, double it to basically 7,500, double it again to 75.88. And every time we've just been rotating back and forth in this 7,500 to 75.88. That's a big range. There's good money. There's a look below and fail here. There's a look above and fail. Look above and fail, right? Look below and fail, look below and fail. These are half hour candles. So these are for, longer time frame traders. But if you don't have a TPO chart, what I'm trying to say is if you don't have access to market profile, don't freak out. You don't need it. Market profile really quickly just tells you where the inventory is, right? And you see here, right, where our low is, there's some single prints. So you know there's going to be some buying there. So you short 75.88 down to those single prints because that's where you know where the bid's going to be because that's where the shorts are trapped from yesterday. They're trapped underneath 70. Pretty simple. Pretty simple. Now, of course, the execution is a pain in the butt. Execution is not easy. And that's why, and therein comes the joy of trading. The joy of trading comes from embracing the frustration, right? The joy of trading, look, double bottom. So here you have a poor low right where the shorts are bid to cover, right? You can't get any better than that for market intelligence. So even if you were short 80, 79, 78 down, you know this is where you cover, right? You got to embrace the frustration. Make it a part of your life. It's good for you. Cleans out the cholesterol. All right, let's see. Now, when London opens, if it can't break that overnight low, we're going to get that. It might be slow. I should actually open up my trading software, shouldn't I? Where is it? What, that frustration is good for cholesterol? Yeah, of course I made that up. Remember Seinfeld? I'm a Juilliard trained dermatologist. Okay, let's go see what we're gonna do here. Okay. So where are the sellers? Where are they? Where are they? Right here. They're right here. Not quite ready for a look below and fail of 74. Overnight point of control is just above us. That's a fairly big pocket for a nighttime pocket. It's 2,400 contracts, which is quite size. There's quite a lot of size here, which is odd. Which is really odd. Um, just label these singles. So yeah, that's 69.5 to 66.75. That's where your short position is, my friends. Everybody's kind of in summer mode, which I totally understand. Okay, okay. What's next here? Seller at 74.5. I'm just gonna wait till London opens because, quite honestly, my first cup of coffee has not clicked in yet. It's been a good week. So what I do when I have a good week, I kind of chill on Fridays. It's just something that I like to do. It's not that I don't trade, but I will definitely trade less, smaller size, protect the money that I made that week. That's kind of important. A big thing for me is how you finish. How are you finishing off that week? Do you still have the money that you made that week? Yeah, nothing to do right now. See what London's got when it opens up. Just relax, take it easy. It's summertime. Remember, summer markets are they're for us to get some relaxation, right? Supposed to get a little R&R. Now, if that overnight low holds, uh, where can we build a position? Hey, fly by PR1, welcome to the stream. So on the left-hand side, all you see is a simple 1-minute candle chart. Okay. On the right-hand side, this is called a market profile chart, if you're not familiar. Some people call them TPO charts, market profile. Basically, all this is a fancy half-hour candle chart. And what they do is every half-hour bar, they assign a letter period. Let me go split, and you can split them out like this, and you can see exactly how much volume is trading where inside the bar. In fact, you can get really, really crazy geek-like on it and go look and see how much trades on the bid versus the offer, right? Not necessary, right? So what these charts do is they tell you very quickly where shorts are trapped, where longs are trapped, where the selling is, and where they stop selling. So for example, there was competitive selling here at the overnight high, just under 75.92. And here we have competitive selling at buying at the overnight low. Hey P Hunter, how you doing, man? Good to see you. Thank you guys for joining us on YouTube. I appreciate you guys. Good to have you with us. By the way, if you don't know me, I'm JJ. This is tradingsyndicate.org. And what we do is we teach regular people how to make money. Real simple. The chart on the right, they call it a market profile chart. And the traditional instruction with market profile is really hard to trade, right? There have been, the people who brought it to us in the 80s, they didn't really tell us where to put the buy, where to put the stop, where to get out of the trade if it doesn't work. They don't really go into that. I try and take it and make it practical. Because in this day and age, people really don't have thousands and thousands of hours. Not saying you shouldn't read books or do the homework and everything, but how much information do you need to actually make money versus information overload? And so for me right now, what I'm doing, yeah, Ninja is a good software. Bookmap is a waste of time. Quite honestly, I hope you're not paying for Bookmap. It's the reason flies because I've been in the business for 34 years and I took 200 companies public. No large trader would ever show their orders on Bookmap. Showing your orders in an order book, showing where the size is basically like sitting at a poker table and showing everybody your cards. My favorite saying is only a trader on a 3-day Coke binge is going to show their hand. They will eat you alive. Yeah. Yeah. The best order flow software, my friend, is right here. The best order flow software is right here. It's a 1 minute candle chart. Tells you that there's sellers at 75.75. It tells you that they stopped selling here. This is where they sell. This is where they stop selling. Why do they stop selling? Because they see buyers lined up underneath this blue line. So they raised price. Now, when we come back down to that blue line, you're going to see if they raise price or if they lower it to capture the buying underneath 69. Markets are very simple. They're not easy, right? Trading is not easy, but it is a simple business, right? And what I like to do is I like to show people the simplicity of it because if your analysis is simple, then guess what? You can save all your energy and all your resources for execution. And guess what? You're going to need all your resources and you're going to need everything you can when you're executing because execution is the hardest part of this business, right? So if we keep the analysis simple, you'll be able to train yourself how to execute. So for us right here, this is not an executable trade. There's no edge here, right? If we clear this white line, you'd be looking to maybe go long, and that would be a look below and fail of 75.74, and we'd be buying maybe 75.76 and trying to sell up here at 78.79. The problem is all the inventory's above us, and there's going to be sellers at the tops of all of these candles. So another thing, if you want to really learn how candles work, don't go and buy the candle book. Don't try and memorize patterns. I'll tell you how candles work in 10 seconds. The top of the candle are where the sellers initiate. The bottom of the candle is where they stop selling. It doesn't matter if it's a wick or a twick or a bwick. It's where the market prints. So here you know that there's a seller at 75. So had you gone long 72, then you know that you're going to be a seller at 74, 75. If it pops 75, you would put some sell orders here and have it take it out as it goes up to 76. There we go. See? Now, can we stay above that 75 or do we come back down? So the mechanics of that would be, all right. Say I decide to go long 75, right? I would put my stop just at 74, right? And I know there's going to be a seller at 76. So I'll go put an order at 76 and a quarter just to see if I can get a print. You see? Now let's see if enough people are short under 74 and a half, they'll come and start buying and we'll go click the 76s and 77s. But if not, we'll rotate back down. So if I'm long at 75, the business reason for my trade is that I'm buying 75 to sell up here. If somebody comes and puts it on sale here, I'm out of the trade because then my business reason for the trade is no longer valid. The market has to give you a reason to trade. There has to be a business reason to take a trade. There you go. There you go. Do all candles with no top or bottom wicks have to get filled? I don't quite understand the question. If you see a candle, like see these candles, they don't have a wick. There's still a trade at the top of that candle. Who gets filled depends on who has their order in first. The in futures, it's FIFO. It's first in, first out. That's why you always, as soon as you're long, you go put your sell orders in so they're in the queue. Do you see how there's that seller at 76 I told you about? Do you guys see how clear that is? Do you see how it costs nothing to draw a straight line? You don't have to spend any money for any kind of specialized order flow software or courses or anything. You draw a straight line because they sold here before, they will sell again. Why? Because they're size sellers. So anywhere in the candle, whatever candle it is, if it's a wick or no wick, I don't know what you guys call that, there is a trade that is represented by that candle. The candle is a recording of the transactions. So you guys aren't familiar with this, but this is, let me show you. The candle chart is just this translated here. You see? In the old days, we would just trade this. But now, since Windows 95, you have chart-based trading, right? But all the market is doing you is telling you, look, there was a trade at 74 and a half, right? One contract, right? So, oh, by the way, I'm flat on that trade because it broke 74 and a half. I'm out. I'll wait. It needs more time to clean up all this crap down here before we do this, right? But do you guys see how if you put if you draw where the sellers are, you don't have to draw where the buyers are. You draw where the sellers are. And as the market goes up, so say I'm long 74 and a half, right? Now I've got an order out at 75 and three quarter so I can get a print because I know there's going to be a seller at 76, right? It's just common sense. Does that make sense to you guys? Right? So I'm out one at 75 and three quarters. Actually, I'm out two. Yeah, it's simple. Trading is simple. People have been trading for thousands of years, long before charts, long before screen-based trading. People were trading on a 15-minute delayed ticker. How did they do that without bookmap and nose worm and nose print and footprint and fingerprint and all that crap? How did they trade? Surely people, speculators made millions of dollars trading without charts. They'd watch a level. So for example, if you know that there's a seller at 76 and the market breaks 76, in olden days before markets were so choppy, you would you would buy 76, 77, put your stop at 75, and then you'd know where the next sellers would be and you'd sell before it gets there, right? Very simple stuff. It's not rocket science. They've taken trading and they've prostituted it so badly that they've got people so caught up in this order flow software. Order flow software, by the way, is a scam, right? Order flow trading is a scam. Everyone's an order flow trader, right? Order flow trading is one of the biggest marketing scam terms ever to be invented. All right. You guys are all getting scammed. They're trying to sell you courses and software, fancy execution software, and nobody actually makes any money off of it. Just watch the candles. There's a seller at 76. Once the price moves over 76, it means the sellers have seen buyers and they're raising price, because that, my friends, is commerce. See? Now, if we had less choppy markets, we'd probably be up at 77, 78 by now. So you'd buy 75, sell 78, make a couple of points, right? So what I do in our room at Trading Syndicate is I teach you guys how to use common sense, just common sense, so you can actually take trades, know when to trade, know when not to trade, right? Knowing when not to trade is huge. 100% of retail traders trade at the wrong time because they don't know when to trade. They don't know when the business is advantageous for them. For right now, the business is really not, it's really not advantageous, right? If you were a larger trader and you see that the market is holding a certain area, you can go and you can buy yourself a little position here. You can buy the sixes and the fives, and then you'd put orders out all the way up, because inventory is short, and it is correcting higher. The poor low here is holding, right? This low didn't take out that low on the half hour, right? It's really simple. But what you want to do is you want to spend your time watching this chart, because this is where your execution is going to come in, right? It'll tell you where to sell. The beautiful thing is these charts will give you a ton of information. Like right now, you can see that the bid has moved up here. Look at the bottom of those two candles. They're right at the same place. So say you buy some contracts between 75 and 76, right? You want to put your sell orders out. Put your sell orders out. And if you don't sell, lower price. Real simple. Volume profile is great to see where the position is. Don't trade off of it though, right? You can see that there's position here. You can see a bit of a position here. And if you drag it out, you'll see, ooh, there's gonna be resistance up here. Just right where that white line is. What a coincidence, right? The thing is, top tick, you don't want to really overdo it with too much crap on your chart. The simpler a chart is, the easier it is to trade, because then your mind's not all scrambled, right? You knew there were sellers here, right? And you knew there were sellers up here, right? If you're a buyer at 75, 76, you know you're a seller at 77, because everybody else is selling. You better sell too, otherwise all the customers are gone, right? A lot of people overcomplicate it. All you need to do is just watch the 1 minute chart. So top tick, did you see how if we had bought 75, 76, we would have been out by 77 and a half, 77? It's just good business. Otherwise, you're just futzing around hoping and praying that your trades work. Here, the market's actually telling you where your trade's working, where it's not. All you got to do is pay attention. But what we've done is we've taught people to not pay attention. We've trained people to have a 10-second attention span, right? And that's how they get you. Look at this fancy thing over here. Look at this fancy chart. Look at this. There's a volume cloud over here. There's flatulence over here and confluence over here, and the Nasdaq's doing this and the VIX doing that. All the while you're missing the trades, right? You're totally missing the trades. You know, I'm long 76 again, and I'm selling 77 and a quarter and a half. Right, I'm just playing with the micros here just to see whether my brain's working. Right. So when you buy, you go and you put in your buy order, right? Say you go and you put in your buy order, and I bought 76. I put my stop down here. I go and I put my sell orders out. So right now I'm offered at 77 and a half, and I just got taken on one. I'm also offered at 3/4 and 78. I've lost another one at 77 and 3/4, 78. And I've got one left, and as it goes, take me at 78 half. Thank you very much. I'm done. See? Target is 75.79, just under VWAP. There you go. You love your flatulence, confluence, flatulence, trade maker? Maybe stop eating beans. you know, at our age now, trade maker, we have to think about digestive health. What do they talk about? The gut microbiome, right? There you go. Good stuff. Okay. And that's pretty much it. We want to teach you how to make money, but more importantly, we want to teach you how to keep it, right? So once you make a little scratch, there's no such thing as house money, right? It's not your money until it's actually in your bank account. Your profits are not your profits until they're in your bank account, right? Until the money is in your account, it's not yours. If it's in your trading account, it's not yours until it's in your bank account. Straight goods. So it's Friday. You guys should be getting your Friday wires. Should have put in your wire requests yesterday to clean out your accounts. Just leave in there what you need to trade. Got it? Brokerage accounts are for wiring money out of, not into. Okay? I've never wired money into a brokerage account other than when I started futures trading. You fund the account and that's it. You don't blow it up and keep adding money into it. We'll teach you how to do that. And when I was on the other side, I never wired money in. You put in stock, you sell stock. Every Wednesday, you put in your wire request. Get a wire on Friday. Pretty simple. You should be taking money out of your brokerage account every week, every 2 weeks. The longer you leave your money in your brokerage account, the more likely it is you're going to do something stupid, like trade with your ego instead of your brain. Right? Any questions? You guys good? So look above and fail of 75.88 worked nicely, covering in the 70s, right down here in 70s, 71s. And then what's next? I think we're just going to chop around here for a while. Now, on a longer time frame, our stops are just here, 75.81 and 3/4. Just showing you where the sellers are going to be on the half hour. And here you can clearly see the sellers right here, 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 right? Okay, so those are your levels. Basically 75.80, 75.82, 75.85, and then up to 88. And then you're going to have sellers here, just at 92. Okay. That is pretty much it. AP Hunter, what is a divergence pattern? I don't know what that is. And it's not too late to ask. We still have like 7 minutes. Can you explain to me what a divergence pattern is? And I'll try and explain the business reason. You guys, retail traders have a lot of terminology that doesn't really exist institutionally. You guys have all sorts of like terms, right? Like unfinished business. When we say we've got unfinished business, it means we need to go to the bathroom, right? On a trade desk, if I say I've got unfinished business, it means I need to have some prune juice because I'm a little backed up, right? You guys have a different meaning for unfinished business, which I actually have no clue what it means. Candles go one way while indicator goes another. Ah, get rid of the indicator. Great question. I didn't know, and I didn't know that. Get rid of the indicator. Most indicators are useless as tits on bulls. Excuse my language. Just get rid of the indicator. What do you need an indicator for? My friends, you are the indicator. Just remember the top of the candle is where the sellers initiate. The bottom of the candle is where they stop. Why do they stop selling? Because they see buyers and zip, they raise price. See, they sold all the way down here. They saw buyers at 76, zip, raise price, right? See? Simple. See? And that is free, P Hunter. Completely free, right? I remember in 1994, I had this girlfriend who was into this country furniture, and she took me to this store in Vancouver where they sold this stuff. And they had these like, they had a kitchen table that looked like it'd gone through a nuclear war, and it was like 3 grand. And I said, you know what? If you go to Saskatchewan into the back of a farmer's barn, you can get this stuff for free. They'll just give it to you. Why would you pay 3 grand for the table? Same thing with this. Don't pay for these indicators. Just learn how to trade. Just learn how to trade. Learn how markets work so you can have actionable, intelligent information, right? Yeah, just get rid of the indicator, man. You'll be much happier. The candles are telling you now that They don't have to sell under 76. You know that there's a seller at 79 and a half. And if we get above VWAP, right? If we go above here, right? The next seller will be at 81. And that's free. My pleasure, P Hunter. Make your life simple. Life is complicated enough as it is. Trading shouldn't be overcomplicated. It's just another thing that make your hair fall out, right? Don't let them get you, right? Keep it simple. Come to our room. We'll teach you how to execute. And what we do is we teach our traders the mechanics of execution so they can train themselves. This way, you train yourself. So when you get into a bad trade, you're automatically out of it. You have a certain way you do business. You only do business when it hits a certain, you know, a certain type of scenario, and you train yourself. So it's like when a pilot hits turbulence, they are trained to act and react. And that's all trading is. It's just repetition, right? Good stuff. If you have a follow-up question, cool. I'm in no rush to go anywhere. Fire away. Yeah, we got some time. I mean, if people don't mind, I don't mind. The guys in my room are all asleep. They're not asking any questions. I think they're all sleeping in their coffee mugs. So fire away, P Hunter. So, for example, if you were shorting this, right? Say, okay, there, JJ, there's a short here, right? I'm going to short 78. Well, you just put your stop here because that's where your seller is, right? Your seller's right here. Where am I from? I'm from Saskatchewan. I grew up in Regina, Saskatchewan. And then I lived for 30 years in Vancouver where I traded for proper villains. And now I'm in Liverpool, in the great city of Liverpool, the greatest city in the UK. Bias for overnight. Overnight inventory is short. So I think if enough idiots shorted down here, whoops, hang on a sec, sorry. If we get enough people short in this cost basis, we're going to do one of these. But VWAP right now is the goalkeeper. The goalkeeper. That's pretty much it. P Hunter, did we lose you? I'm keeping the stream going. Oh, here we go. Yeah, basically that is what happens, right? What you need to do is you need to get rid of words like divergence and flatulence. Okay? Confluence, flatulence, divergence, get rid of that shit. Okay, so what happens when a market sells off? There's a series that happens. When a market sells off, first thing that happens is that short sellers come in and cover. Then wholesale traders, wholesale longs build a position. This is smart money, shorts covering. Wholesale longs build a position, and then comes retail. Now, those are the three sets of buyers. Now, if the dumb money shorts short enough here, when they go to cover, the cost basis or the position is going to be here, and we'll go sell it higher, right? So if you get rid of flatulence and confluence and divergence and all those weird terms that you guys use and just look at it like, this is where they bought the apples really cheap. This is where we raised price, and guess what? It brought in buyers. So then we can raise price and sell it above VWAP. That's all it is. It's really simple. The problem is retail trading communities have come up with all these terms: confluence, flatulence, divergence, unfinished business. What's the other one? Oh, buyers and sellers are fighting each other, right? Oh, markets are going higher, buyers are in control. What are you, on crack? What buyer wants to pay more, right? It's at $5. Oh, I want to pay $8, right? Buyers are in control when prices are going up. That's the dumbest thing I've ever heard, right? Get rid of all of that, right? Keep it simple. If you simplify all of this complex analysis, your actual execution is going to get better. Think of it this way. Trading is a street fight. When you're in a street fight, if any of you have ever been in a street fight, the last thing that you're thinking about when you're in a street fight is Euclidean geometry or the Pythagorean theorem. You need to act and react and move. You can't sit around thinking, because by the time you're done thinking, the other guy's going to have punched you in the face about 50 times. Okay? Keep it simple, make your money, and then keep your money. Okay? I have no idea why the NQ is not pumping. Maybe it ran out of gas. Have a great day, everyone. We'll see you at 9:15 a.m. for the next session. Appreciate you guys. Great questions, P. Hunter. And you guys in the room, have a nice nap. Love you guys. We'll see you at 9. Hopefully you're awake. I know the price action started putting people to sleep. If I don't see you, have a great weekend. Stay out of trouble and don't take candy from strange market makers. Bye for now, everyone.